Welcome to the Riskwiser Zone. I'm your host, Lewis. Today, we're going to dive into two significant stories that have caught our attention in the world of finance. As always, we'll provide you with a balanced view, exploring both sides of the coin. First off, let's take a look at what's happening in Australia. The housing market is on fire, and not just because of the summer heat. According to recent reports, the $240 billion Future Fund has expressed concerns about investing in the United States, citing increased volatility and uncertainty under the Trump administration. This has led to a shift in focus towards Australian assets, including infrastructure and housing. On one hand, this could be seen as a vote of confidence in the Australian economy. The Future Fund's decision to prioritize local investments may provide a much-needed boost to the country's infrastructure and housing supply. However, on the other hand, some might argue that this move is driven by caution rather than optimism. With global economic uncertainty on the rise, it's natural for investors to seek safer havens. Speaking of which, our second story takes us across the Pacific to the United States. The chair of the Future Fund, Greg Combet, has explicitly stated that the U.S. has become a riskier place to invest. This sentiment is echoed by many experts who point to the ongoing trade tensions with China, the growing budget deficit, and the unpredictable nature of the Trump administration's policy. Now, it's essential to acknowledge that these concerns are not new, and some investors may have already adjusted their strategies accordingly. Nevertheless, the fact that a significant player like the Future Fund is publicly expressing its reservations about investing in the U.S. should give us pause. As we navigate these complex issues, it's crucial to consider multiple perspectives. While some might view the Future Fund's decision as a warning sign for the global economy, others may see it as an opportunity for Australia to shine on the world stage. We'll continue to monitor these developments and provide you with in-depth analysis and expert insights. For now, let's take a break and come back with more from the world of stocks and finance on the Riskwiser Zone. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're joining us again as we dive into the latest developments in global markets and economies. Today we're focusing on Russia, where two significant stories have caught our attention. Firstly, a report from the Central Bank of Russia indicates that the ruble has become the dominant currency for export transactions, accounting for 52.3% of all transactions in April. This shift is part of Russia's efforts to de-dollarize its economy and reduce reliance on Western currencies. While this might seem like a victory for Russian economic policy, it's essential to consider the broader context. The expansion of opaque payment systems, primarily involving the Chinese yuan, has been a crucial factor in this trend. These systems allow rubles from Russian importers to pay for Russian exports, but they also come with significant costs and complexities for businesses. Moreover, despite the growth in ruble-based transactions, much of Russia's export revenue remains overseas, leading to a reliance on pre-existing foreign currency holdings or discrete conversions to close the gap. This situation has resulted in a contraction of Russia's domestic foreign exchange market, with demand for foreign currency in May falling to its lowest level since the Moscow exchange suspended dollar and euro trading. The ruble has appreciated steadily over the past 6 months, but this trend might not be entirely due to economic fundamentals. In another development, the Russian Security Agency, FSB, has arrested a man suspected of spying for Ukraine. This incident highlights the ongoing tensions between Russia and Ukraine, which continue to impact regional stability and global markets. As we analyze these stories, it's crucial to maintain a balanced perspective, recognizing both the challenges and opportunities facing the Russian economy. While de-dollarization efforts might provide some benefits, they also introduce complexities and costs that could affect businesses and investors. The interplay between economic policies, geopolitical tensions, and market dynamics is intricate, and understanding these relationships is vital for making informed decisions. As always, we encourage our listeners to stay informed, consider multiple sources, and consult with experts before making any investment or business decisions. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We've had a fantastic show so far, discussing the latest market trends and risk management strategies. As we wrap up today's episode, I'd like to shift our attention to a fascinating story that's been making waves in the tech and defense industries. You may have heard that OpenAI, the company behind the popular ChatGPT platform, has been awarded a $200 million contract with the U.S. Department of Defense. This partnership aims to provide the DoD with cutting-edge AI tools for various applications, including administrative operations, data collection, and proactive cyber defense. Now, I know some of you might be thinking, wait a minute, isn't OpenAI's technology supposed to be used for more benign purposes? And that's a fair question. The company has indeed faced scrutiny in the past for its terms of service, which initially prohibited the use of its technology for military and warfare applications. However, it appears that OpenAI has since revised its policies to allow for more flexibility in its partnerships. This move has sparked debate among experts, with some arguing that the company's AI technology could be a game-changer for national security, while others raise concerns about the potential risks and ethics of using such powerful tools in military context. As we consider this development, it's essential to acknowledge the complexities involved. On one hand, the use of AI in defense applications could lead to significant advancements in areas like cybersecurity and data analysis. On the other hand, there are legitimate concerns about the potential misuse of such technology and the need for robust safeguards to prevent harm. As investors and risk managers, it's crucial that we stay informed about these developments and their potential implications for the market. The intersection of technology and defense is an area that warrants close attention, as it can have far-reaching consequences for the global economy and geopolitical landscape. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.